definitely excited to talk about a home insurance topic that has come up a lot more recently, and even something that Emilio and I discussed about a client last week that I think is really important for a lot of potential home buyers to know, and even people who are listing their home, because that was the instance that it came up for us last week. And the question is about roofs. Client that Emilio was working with trying to sell their house, and house was beautiful. It was built in 2001 in excellent condition. And the buyers on the other side were saying that they were finding it impossible to get homeowners insurance, that nobody would give them a home insurance policy because the roof was original to the house, which would have made it 21 years old. Anything over 20 years old, they were saying that they could not get insurance because the roof was that old. And Emilio asked me if that was something that was true. And the answer is maybe for some companies, but definitely not for all. If you're an insurance company, right, you can set your rules to be whatever you want them to be. You can decide to insure homes based on, for the most part, any criteria that you decide. They can choose what risks they want to take or not, and they can choose to rate it however they'd like to, pretty much, because they're a for-profit business. They can decide what they think is going to be a good way to make money by insuring properties and taking premiums, and also putting in rules to make sure that they're not insuring something that they think is going to result in a claim. So sure, there are some companies that are going to tell you if the roof is older than 20 years old, we're not going to insure it. But I can tell you with absolute certainty that that is not true for every insurance company, and it does not make it impossible to get homeowners insurance.
These buyers decide to move forward, they find insurance, they call you up, they get a reasonable insurance policy, and they proceed with closing. And then a couple of years later, they do fix the roof and they do put a new roof on there. Does that affect the premium at all?
So with some companies, yeah. So some companies, not only do they require the roof to be within a certain age, but they may also rate for it. They might give you a credit or a discount, or just impact the rate, higher or lower, depending on how many years old the roof is. So that's absolutely something that is worth telling your insurance agent whenever you replace your roof. Now, there's a lot of companies that don't include roofs as a rating factor at all. So in that case, it doesn't save you any money, but it's good for us to still note your file, because God forbid you do have some sort of claim where there's a big windstorm comes through or something and destroys half of your roof, and you need to file a claim for it. Well, if we have record that you just replaced your roof last year, that's going to be a really simple claim. The insurance company is definitely going to pay to fix your roof. But maybe your roof is actually 25 years old, and then you file a claim because of a windstorm destroying part of your roof. You might have a trickier claim there, because the insurance company could make the case that, well, the roof was really beyond the point when it should have been replaced already, and this was just the straw that broke the camel's back kind of situation, right? And so why are we going to pay for the roof when you should have done it last year?
Homeowners have a responsibility to do maintenance on their home in order to avoid insurance claims. And if there's lack of maintenance or lack of responsibility on the homeowner to properly maintain the property, and something happens, then the insurance company is in a position to say, hey, you didn't manage your property well enough, and now there's this issue that could have been avoided had you been maintaining the property accordingly.